Hello and welcome to another week of Good Investing. I'm Rachel Gren.
And I'm Andrea Slick.
And Good Investing, Andrea, is a podcast all about how a passive investor can transform their financial future through multifamily syndication.
That's right. If you're a busy professional or an entrepreneur and you want to make money while you sleep, this is the place for you.
Yes, welcome home. This is it. So today we always have an exciting guest on every single week, and you guys probably get sick of me saying that, but this guy is like a renaissance man. I don't know how else you describe someone that has his kind of bandwidth.
Yeah, he's absolutely amazing. He started off as a passive investor and has scaled his business to huge leaps and bounds, just like huge growth. So very interesting background and super inspiring.
Yeah. And he has achieved financial freedom. He could live off of his passive income, but as he talks about in today's episode, he can't. He's like, I can't sit still. He gets restless leg syndrome.
Yeah.
Which some people are that way. It's not me. It's not me.
So you could do the 6 hours on a hammock reading a book?
I will be on my Kindle until it runs out of battery. All day, every day, baby. In the Maldives on a hammock over the ocean. Oh my gosh, I'm gonna book a ticket. Okay, Kenny Wolfe is our guest today, and he's an experienced multifamily syndicator, the founder and CEO of Wolfe Investments. Wonder where he got that name. And published author of Investing in the Dream, How to Acquire Multifamily Real Estate and Attain Total Financial Freedom. He invested in his first multifamily property in 2010 and instantly saw the potential for real estate to transform his life, giving him the opportunity to quit his day job and start a company. Kenny is passionate about helping others attain financial freedom through real estate investing. He believes in the power of passive income, making money while you sleep, which we just said.
Wow.
Aligned. I love it. And he encourages others to think beyond traditional investments to grow their wealth. Kenny has grown Wolfe Investments to $557 million in assets under management in commercial and real estate assets nationwide, and is a principal in 5,300 units, 8,000 units all time. He holds a BBA from Baylor University and an MBA from the University of Texas in Arlington. Kenny currently resides in Plano, Texas with his wife, daughter, and son, and when he's not scouring the market for new deals, he enjoys discovering new vegan restaurants and rooting for the Broncos. All right.
We're in for a treat. I'm ready to learn.
Let's do it. Hi, Kenny. Thank you so much for coming on to the Good Investing podcast. We're happy to have you.
Thank y'all for having me. I appreciate it.
Yeah,
Great
of
to be
course.
here.
Welcome.
So let's start back in the beginning in 1981. Where are you from, and how did you find your way to Dallas?
Yeah, that's a good question. So 1981, born in Denver, Colorado, so still a very big Broncos fan. Go up to at least one game a year, so we're excited about that coming up here in a few weeks in October. But I was born in Denver, lived there for 8 years. There was a massive migration of oil and gas jobs. So that's what my dad did. Brought us down to Houston. So I lived in Houston most of my life, but I did 2 stints overseas growing up. So I was an oil brat. Lived in Perth, Australia for about 16 months of my junior high career. And then 3 years of my high school career was in Cairo, Egypt. So it was a great way to kind of see the world. I've traveled a lot more and experienced a lot more of that international travel than most folks in their, lifetime. I did that by 18 or 16, whatever, 17 actually years old. So very, very fortunate to do that. Came back to my senior year, was bribed to come back to Houston to finish off my high school. So did that there in Houston, and then went to Baylor University for undergrad, and then really just did not like the Houston summer, so I went to Dallas to find it's hotter, but it's drier. So
exactly.
Pick your poison, I guess. But anyway, so that's found an entry-level job in oil and gas accounting. Worked my way up there, was CFO of a spin-off company there with them at 28 years old. From there, just really poured all the money that we were making into, and made junior partner in that deal, poured all the money back into real estate, into multifamily real estate as a passive investor twice. We did that to kind of learn the ropes. And then when we moved back to Dallas, was able to, our third multifamily deal, we syndicated, put a group together, about 12 investors, and then bought a 76 unit deal in Wiley, Texas.
Wow.
So that was like 30 seconds from 1981 till 2022.
Yeah.
So,
That's the rundown.
Did I miss like the part where you started off in single family at all, or did you just straight go into multifamily?
you know what? I'm a big believer in go big or go home.
Yeah.
So we skipped single family.
Wow.
Good for you.
That's
That's
amazing.
A lot of people
We're
feel
gonna
like they
run
have to
myself.
suffer through single family before
For
going through
sure. Yeah.
Right. Yeah. I mean, we just, some folks do. I mean, you really need about 50K to get going in multifamily. And so you really need to either, save up or flip your way to 50K. But you don't have to start there, especially through syndication model these days. You can really pool together investors and buy bigger properties and really kind of launch your portfolio that much faster.
Absolutely. Yeah.
So from your first passive investment, when did you decide, listen, I want to do this actively. I want to get out of oil and gas. Like, what was that genesis like?
Well, so I knew even before I went passive that I wanted to be an active syndicator. That was always the end goal. But me coming from oil and gas accounting, I knew nothing about real estate. And I knew that. And so what I did was I picked out two different types of passive investments in multifamily. One being a huge fixer-upper in Arlington. It's the one that folks talk about in our circles that the pizza delivery guy wouldn't go into the property because he'd get mugged. So it was that bad. Cars on blocks. We paid $12,000 a door for it, which sounds amazingly cheap.
Wow.
But it needed about 10K a door worth of work as well. So almost double the purchase price. But that was back in 2010, right? So you have to think on your 2010 hat. And so that was a great experience to figure out the team on management, especially over a big rehab deal, insurance, lenders, trying to figure out who are the teammates that you want on your team to do a full-on multifamily business. And then the other one was a Fannie Mae loan, so our yield play. So again, I wanted to see that model, bipolar opposites here, like cash flow heavy on the second one, no cash flow for 18 months on the first one because you're doing this massive rehab, re-tenant, all that kind of thing. But the second one was a Fannie Mae loan, which is great because that gave me my Fannie Mae experience. And so my third deal, which I syndicated, the 76 unit deal, I was able to get a Fannie Mae loan just myself on that. So so from then on, it kind of set us up for the non-recourse financing from here on out.
Wow, you really took that leap of faith on the first one, like
Absolutely.
The first deal going in a very high crime area. How did that turn out for you? Did you bring a SWAT team in? How did it work out?
So it was definitely, I'd say a D class, definitely a D class asset, but but it wasn't like you were going to get shot.
Okay.
During the day, you probably wasn't going to get shot. But it was, absolutely. My hand was shaking when I wrote that. I invested 100K in it too, so it wasn't like it was like 50K. It was a big, at 28 years old, that's a big dollar amount.
Oh, yeah.
And really anybody, but still at 28, that's a lot. So anyway, wrote that hand shaking when I was writing it, and it was great. I mean, I handed the syndicator my check, and I said, just before he took it, I said, look, this is my investment and my education, so I'm going to be asking a lot of questions, during the process. I want to learn this. And so he took my check, and I asked a lot of questions and learned a whole bunch. So, but it was great. We ended up doubling our money in about 4 years on that deal.
That's amazing. That's awesome.
Wow, that's incredible. So I know that a majority of your career has been in the multifamily space. Are there any particular acquisitions that you are particularly excited about that you've been able to acquire over the past decade?
Yeah, I mean, it's been fun. I mean, we started out with B and C value add, and we still buy that today. We just buy that in different markets. So we're as a company, we're in 5 different states for multifamily. In Texas, we own from El Paso to Longview and everywhere in between I-20. And then in Ohio, we're in Columbus and Cleveland. So we're, all over the map. And now we've expanded to, all the way from A class to D class. So we're buying a deal now from Invesco, so more institutional quality assets. And then, 3 months ago, we bought a D class to turn into an A. So it's it's which is a huge rehab. It's like 48 a door of rehab. So it's almost a development project, right?
Yeah.
Redevelopment project down to the studs, basically. So, so we have a very wide range because we are vertically integrated on the management side and the construction side on the multifamily kind of rehabs on there. So that gives us a lot of leeway. And so I don't know. I mean, there's of those that we've bought in the past so far. I mean, that I can talk about. Probably the coolest one of existing multifamily would be the historic post office building in downtown Dallas. That was pretty cool. So we picked that up in 2020, and really that should have gone to an institutional class investor. We picked it up because there was some fear in the market. A lot of the institutional folks had just parked it on the sidelines, weren't buying anything, and so at that time we were the prettiest buyer, at the ball, and the only one. So
you gotta tell us
anyway.
the story about the specific apartment unit. You know which one I'm talking about.
Yeah. So it's also a historic asset. I'm a history buff myself, but I mean, there's a lot of history there. It was the old Dallas County Courthouse, and when it was first built, way back when in the 1930s. But I mean, in there, there's a courthouse, and so we had a Roe v. Wade was first heard there in that courtroom. And so actually when that was overturned a few months ago, we actually were called by some federal agencies to get ready. So anyways,
wow.
So we had to make sure, there were, our property wasn't damaged from protesters. They actually were protesting a different section of Dallas, so we were fine, but we got that kind of strange phone call, so that was pretty cool. And then Jack Ruby was actually held there overnight after he shot Lee Harvey Oswald. And there's she's right on the third floor. There's a resident who actually lives there. You walk through the hallway, you can see this kind of weird extra window with bars on it. And so she lives in the Jack Ruby unit, and she refuses to leave. So she loves it so much. So,
and speaking of history, tell us a little bit about the Rockefeller Center too. That's a really, really cool deal that you guys.
Right. So I wish it was the Rockefeller Center in New York, but we bought the Rockefeller building in Cleveland, Ohio.
That's what I meant.
No.
The Rockefeller building.
I almost
didn't
want to correct
years,
you.
So I
almost didn't want to correct you.
Speak it into existence.
You didn't have to. No one would be the wiser.
So we bought the Rockefeller building about 2 years ago. We're converting. That's another historic asset. So the Rockefellers built it in 1905 to house their many companies they had. So, but it's a beautiful building, and it's 17-story asset. We're going to convert to 436 multifamily units. We're going to keep 2 floors of office on 2 and 3, and then the ground floor. We're already getting approached by some, major coffee companies, some restaurants that want to be there on the bottom floor as well. So it's going to be a mixed use, but I mean, 85% of it's going to be A-class multifamily. It's just a beautiful asset. We've got, it came with a historic parking garage, which, our engineers went in there for about 5 minutes and told me not to go in because it was about to fall down. It hasn't yet, but it was pretty bad. So we actually, because it was a historical parking garage, we actually had to, convince the state of Ohio to let us tear it down. You just couldn't save it. And so they approved, which the federal historic folks approved as well. So now we're able to tear that down, and parts of part of our underwriting, or that wasn't part of our underwriting to make revenue off that section, but we're getting approached by some grocery tenants that want to put there like a downtown higher end grocery store there, a parking garage, and then we could actually build on there a second tower, which we didn't underwrite at all.
Oh, that's amazing.
Wow.
So when you buy these bigger properties, there just seems to be more and more that's given, or more opportunities that present themselves. We think we're going to get, because we picked up a few parking, open surface parking lots around our building as well with that purchase. We should be getting an LOI from a hotel folks that want to buy that from us for almost what we paid for the whole thing.
Wow.
So it's a huge, I mean, it's just, this
amazing.
Deal just keeps getting legs. We didn't underwrite those. So it's going to be an amazing return for investors if you even just one of those hit.
That sounds amazing.
So the Rockefeller building today, the Rockefeller Center tomorrow.
Exactly. There you go.
Speak it into
I keep
existence.
trading up. So
I want to
That's so
go
great.
back really quickly. You said that you bought an asset that you're turning from a D to an A. And that is interesting to me because I thought with usually D class apartment buildings, the location really is a determining factor that makes it, D class. So tell us a little bit more about that.
sure, yeah. So it's about a 200, maybe a 300-yard walk from downtown Carrollton, Texas. So here in DFW, and I call it a D plus. It's maybe a C minus. I don't know. It's somewhere in between. But I know that the first week we walked around there, I was being shouted out in Spanish. But anyways, I speak enough to know what they said too. But anyways,
What did they say? No, I'm just kidding.
not nice
She's
things.
fluent. She's fluent.
Yeah, not nice things. So anyways, so it's a rougher property, but its location to downtown Carrollton is huge, and so it also has a school kind of catty corner to it as well. So the location can definitely support A-class rents, but it was just neglected over the years. So there's a lot of work going into it. There's window units and no central AC, so we're putting in central AC, which for anybody who's done that before know that's a huge project. You got to tear down basically all the drywall and go down to the studs to do that properly. So, but we'll put in forward flooring, new cabinets, new granite or quartz, depending on what's available at the time. All that kind of fun stuff you have to work through a construction project. But it's really going to take it from what it is into to an A-class asset.
Nice. And when you talk about vertical integration, is that the property management component, or do you also have some construction crews under you as well?
Right. So we definitely have the management company. That was big. We did that about 5 years ago, really just to give us more control. And I think we've bought, and I'm biased, but I think we've bought a better mousetrap with our management company. We've hired some great folks from Crow, Lincoln Property Group. So a lot of those folks kind of work for us now. We keep hiring really top-notch people, which is huge for multifamily because it is so operational heavy. If you can't, you can buy you can pay the most amazing price, but if you can't operate it, it's not going to, if you can't hit your business goals. So that was a big deal. And then we do have a construction arm, but they just do our multifamily conversion or our multifamily kind of rehabs. We do big, ground up multifamily. We also do office. We have 7 offices we bought in downtown locations we're converting to multifamily. So that's our group is not ready for that yet. We're hoping one day, but they're not ready for that yet. So I'm kind of staying their lane there on the construction side.
Okay.
So
Super exciting.
Yeah, it's super exciting. And I know that you're also, working on development deals in Ohio, right?
Right. Yeah, we've got ground up in Texas and Ohio, actually.
Awesome.
Multifamily projects going on. And those are great. We like those a lot. The pricing in Dallas-Fort Worth got on the B and C class got so high that you could, pay an extra 30, 40 grand a door and you can build brand new assets. So that's kind of where the market was. So we jumped into the ground up. I went out and actually bought some townhome lots myself. I didn't bring any investors in because I did not know what I was doing. So I wanted my money at risk and not there. So I ended up buying some townhome lots that I could divide up into more townhome lots. So I had to work with the city. I learned so much. The soil test came back not so great. So we had to dig down 8 feet and then backfill in with clean dirt. I didn't even know there was such a thing as clean dirt. But anyway, so I learned a lot.
It's an oxymoron.
Yeah, I was hoping we were going to hit oil, digging down 8 feet. Didn't get any oil. But anyway, learned a lot, made some good money on it. And then, we've sold those townhomes now. But that was kind of the way to learn was more hands-on because you can't, the books won't teach you that. You could just hop in and go for it.
Yeah,
for
so
sure.
I'm super curious. You sound like you're super successful. You've made so many good decisions in your investments. What have been your keys? We know the go big or go home, but what have been like the keys to your success, do you think?
I think it's, looking at a market and not just sticking to one thing. So if we had stuck just the B and C value add in Dallas-Fort Worth, our company wouldn't be near what it is today. I mean, we hit 500 and almost 60 million of assets under management in June. I think we'll pass the $1 billion mark with all the construction cost in the next 12 to 18 months. And so if I just stuck to B and C value add in one city, there's no way we could have grown as much as we have. And then, so that's one thing, but also too, like, trying new things. Like we also own about 40 triple net and double net stores in 15 states. So CVS, Walgreens, Dollar General. And so, we listened to our investors. A lot of our investors wanted, stable, steady monthly cash flow. And multifamily is great. It'll produce some cash flow, but it's operational heavy. So we have to chase rent. We got to fix toilets. So the cash flow is going to fluctuate wildly quarterly, right? But if you buy a CVS, CVS is going to pay you rent. And then on those leases, they take care of 95 to 100% of the operational expense. And so you don't have these wild fluctuations. Now you're probably going to miss out on some appreciation, but a lot of our investors were, that wanted to drive around in an RV and just collect an ACH. I'm smiling because I'm like,
who are those? You have investors that live in RVs?
Yeah, for nice ones. And so they, for those folks that were closer to retirement, just wanted a monthly steady cash flow. It's great for them. And so we listened to our investors, and we created a new product. And I think they all thought I would lost my mind buying $7 stores in that first fund because I was the multifamily guy. But now they're convinced. And so now we've built out, we're in our fourth fund now, and are close to raising that 20 million mark on that one fund. So we've got a lot of investors that have come over now to the triple net, double net side.
So, okay, like Andrea said, obviously very successful. Your business is going great. You're scaling astronomically. What motivates you to keep going? What's your why? Because at this point, you could probably retire and be fine. So why do you keep going?
I don't sit still very well. I mean, we'll go on. My wife and I go on vacation, and she can read her ebook in a hammock for like 6 hours, and I can do that for maybe an hour, and then I'm like, all right, I'm done. And I like to read, but I just can't sit still that long. So it's really kind of that. It's just not in my nature to retire. We set a goal for to hit $1 billion of assets under management by 2029, but we're going to hit there probably in 2023 or 2024. So it's just really. I love coming to work. To me, it's not really a job. It's not work. It's I get it's a fun thing now. And that's really you keep hiring people and growing the business. And anyways, that's
you're
my
touching
why.
so many people's lives.
Exactly, and we make massive improvements to our residents, to the communities we're involved in, and then our investors as well. So it's kind of a win-win-win strategy all around, and that's really neat. I mean, we've been thanked by police departments for cleaning up properties before. The city councilman in Cleveland, was really, thankful and appreciative. We took on this Rockefeller project because a lot of people had tried and failed. But anyway, so it's exciting to see the actual physical impacts we're having on our residents and the submarkets that we're involved in.
That's amazing.
When are you going to run for mayor of Cleveland?
No, I'm not there yet.
And how did you get introduced to Cleveland?
Good question. It's actually through Columbus, Ohio. And so I had been, so my parents were born and raised in Ohio. I've got tons of family, 90 minutes south of Cleveland. I never lived there. We'd go up every year for a big family reunion around July 4th. And so I like the area. Columbus, I read the Berkadia annual report. I look forward to that every year. But it kind of runs down through every major city through the country. What was the rent growth last year? What do they project rent growth this year? Population growth, all the demographic kind of nerdy real estate stuff, right? So I read that back in 2015. And it was crazy to me that the Columbus, which is such a great market, hadn't surpassed its 2007 per door prices yet. So it was amazing. So Ohio is it's a landlord friendly state. Columbus is a very diverse employer. It's the state capital. It has the Ohio State University in it. I've been trained to say it correctly. Nationwide's there. You got L Brands there. I mean, you've got the second largest Chase building outside of Manhattan is in Columbus. I mean, so you've got this big diverse employer base. The population grows like 2 to 3% a year, like clockwork since 1840. So you had all these awesome demographics and diverse economy. It's a great place to do business in Ohio. And so it was like, okay, got on a plane and just went and figured it out in 2 days where to buy and where, most importantly, where not to buy. Because if you're sitting in Dallas and then trying to buy in Columbus, Ohio, it's really important to know where not to buy. You can cross off a big X on those, because you'll get stuff sent from brokers that are probably not in great locations. So, and then
also Ohio, did you know, fun fact, Ohio is a 2-hour flight from 60% of the US.
yeah,
Oh, wow.
Okay, I did not know that.
Yeah. Now you do.
Another selling point.
It's a little over 2-hour flight for me, but from DFW. But it's easy to get to. And then Cleveland, we got there really because Cleveland's really interesting as a market. Everybody thinks the river still catches on fire. It's blue, Rust Belt, all these things, right? Nationally, Cleveland needs to help boost its branding because it's not the case. But most people think that. Like even our staff in Columbus, I asked them, like, what do you think of Cleveland? It's the same state, right? And they go, oh, gross. They even Columbus looks down on Cleveland, but Cleveland is a much bigger city. It's growing. It's really cool to see all these national employers there, and they've been there forever. They just keep growing. It's just kind of the silent sleeper of a town. But that's kind of why we were drawn to it. We also like Cleveland on development because as of now, you get a 15-year property tax abatement, which is huge because the property taxes in Ohio are almost as bad as ours in Texas. So it's a really big deal. And we get that through end of May of next year. So you're going to see us, you have to submit your final plans to the city by May 31st. So it's going to be slammed at the city hall.
That is
May.
awesome. Mike's on top.
Yeah, the 15-year property tax abatement is huge, and then the opportunity zone is great there too. So that they put downtown Cleveland as an opportunity zone, but I mean it's one of those that probably shouldn't have been, but it is. And so that's another great way why we like developing there, because you get both property taxes and abatement and the OZ piece.
Okay. So what do you see as the future of multifamily in the next 10 years?
So I just did we have a YouTube channel, but just did an episode on the big shortage of housing we have in this country, and it's massive. I mean, people don't realize that. So as an investor, you really should be tuned into that, because what's our product as multifamily investors? We are producing housing for folks that either can't or don't want to buy their own single family home, right? So that's what our product is. That's what we're selling. And so back in, I think it was in 20, and I'm going to get a little wrong because I don't have my notes in front of me, but in 2019, I think we had a shortage of 2.5 million housing units in the United States. Today, HUD says it's about 3.8 million. So it's getting worse, right? Not better. And that's a massive amount of issues. And then, now with these interest rate hikes and stuff, you're seeing less and less single family being built. I think it's the other day, I think I read that it was like 700,000 new single family builds are going on in the entire country. So, that just tells you, and the demand keeps growing for housing, but we're not keeping up on the single family. And then on top of that, the single family, there's basically no single family starter homes being built now. They don't build 1,500 square foot homes anymore, right?
Sure.
And so that's another thing too. So yes, we have a shortage, but even more so for the starter homes, right? Here in DFW, we're seeing a lot of townhomes being built. That's the new starter home.
Yeah.
That's just what it is, right?
Right.
They don't build any kind of single family 1,500 square foot homes anymore, because you can take the same, quarter acre lot and build 3,000 square feet and make a lot more money as a builder, right? So anyway, so long story short, the demand is huge for multifamily. The supply is not keeping near pace with it. We're already in a deficit. And I think we're seeing that nationwide. We've got, we had RealPage speak at one of our conferences we had in Seattle a few weeks ago. And he's a really nerdy guy. And I love it about real estate, but he had these great graphs. I'm a sucker for a good graph. But he said nationwide, we're like 96% occupied.
Wow.
And even with all these rent hikes, you're not seeing people condense down into, two families going into a 2-bedroom. You're still not seeing that nationwide. And then obviously in the states that we're in, we play in are more that they're getting population growth and not any kind of migration out of them. And so, for those markets that we're in and those states we're in, I think we'll continue to see huge demand, and rent growth is just going to keep going up.
It's an exciting time for multifamily for sure.
It really is. Well, Kenny, if people wanted to get in touch with you, how could they do that?
Sure. The best way is to get a hold of us is through our website. So it's wolfe with an e-investments.com. We're big on social media. As I mentioned, we've got a YouTube channel. We put a educational video out every week. So we have tons of it out there. Facebook. The millennials and younger convinced me to do Instagram now, so I'm on Instagram.
TikTok. You got to get on TikTok.
See, I don't know. That may be next.
Choreography, learn the dances.
Your daughter can help you with it.
There you go. So that's really the best way to get a hold of us. And then we also we host a big multifamily conference 3 times a year. No guru package to buy at the end. This is just education and networking. And so
when's your next one?
Next one is in November 12th in Atlanta. We expect to have 400 to 600 people there, so it'll be a big event. We fly in national speakers to come speak in the morning, and then networking Friday night, Saturday night. It's a great event. So if y'all can come check it out.
Count us in.
Yes, thank you so much. Great. Well, we will go ahead and link all of that info in the description so our listeners can go check it out. Kenny, thank you so much for jumping on and sharing your story. We so appreciated it.
Thank you so much.
Absolutely. Thank y'all very much.
Thanks. Okay, wow, what a wealth of information and knowledge. It was like a fire hose. I feel like he doesn't have enough to do.
Well, so one of the questions that I didn't really get to ask him, which I thought afterwards, was, with $1 billion on the horizon, how do you not stress? Yeah. Like, he must have a really powerful team, which I know he does because we interviewed one of our guests.
Yeah, we talked to Zane a few weeks ago.
Yeah, Zane.
And also, the leveraging a team is huge. That's what we do in our business also.
Yeah.
That's how we're able to get it all done. Because if you're doing it yourself, not only would you not be doing it well, but you'd also be like killing yourself in the process.
Yeah.
So he's been able to leverage his team and been able to scale super quickly that way. And I can't stress enough how much that helps whenever you are scaling a residential, commercial real estate business.
But super refreshing that a person with so much success could be so down to earth.
Oh, yeah.
And just like kind vibes.
Accessible.
So nice.
Yeah.
So
I don't know what this whole thing is about. You have to be like a total you-know-what to climb like the business success ladder and become a CEO.
Yeah, you can be nice and be successful.
Yes, I could not agree more.
I feel like people are just going to
enjoy him. Yeah, totally. And I have, and he's amazing. And he and my mom are besties, but but yeah, totally. You can have it all and make money while doing it. Yep.
Thank you, Kenny, for giving us a great episode.
Thanks, Kenny. And guys, like always, head over to goodgoodinvesting.com to find out more about in-person meetups that we have coming up, to get on our email list, to schedule an investor discovery call, to get cracking on your financial freedom journey. You can do all of that at goodgoodinvesting.com or shoot us an email, goodgoodinvesting@gmail.com. And yeah, until next time, Andrea, don't invest good.
Invest twice as good. Bye.